AMC shares continue to be up on the screen this morning after the movie theater operator announced a $110 million equity capital raise and said it was seeking a 1-for-10 reverse split of its common stock. Joining us now for an outlook on the company is Chad Beynon. He's Macquarie Group senior analyst. Chad, it's good to see you here. As I said when this release came out yesterday, the consensus seems to be, okay, this is a clever way to continue to inject liquidity into the company. But I tell you what, if you're courting retail investors and you put out this complicated transaction, I guess they love it no matter what. I don't know, Chad, what do you think?
Yeah, no, that's a good way to put it. I actually think this is kind of a step in the right direction for fundamental analysts, just because, this will help reduce some of the debt, reduce some of the deferred rent. Adam Aaron, he's probably one of the people working harder than anybody this holiday season. I don't think he takes many days off. And, they found a nice partner here. They found a cross-capital structure investor that owns some of the debt. They were willing to invest in the apes at a price already, well below where it's currently trading. And then those proceeds will, help reduce some of the debt, help reduce some of the deferred rent. They're not out of the woods at this point, but this is certainly a step in the right direction. And as you know, I'm sure there's, more announcements to come in the near term. There's some additional votes that could kind of help them free up some additional liquidity. But it was, a positive surprise for fundamental investors.
Chad, usually, or my old rule of thumb is anytime you see a 1-for-10 stock split or something like that, that is often the sign of a very distressed company. Do you view AMC as distressed, and do you anticipate some form of major restructuring next year?
Yeah, when we caught up with the company, the way that they framed it was, 5 years ago, they had roughly about 150 million shares outstanding. After all of these announcements here, they're close to 1.5 billion. So from a share count perspective, this will kind of put them back where they were, pre all of these acquisitions, pre the meme rally. So it's kind of getting back to that point. In terms of what it does, to your point, I don't really think, outside of a perception standpoint, it really matters that much unless they're able to, get additional approvals and raise equity at elevated levels. Maybe to your point, there's a little bit of a rally on the back of some meme investors not really understanding a 1-for-10 reverse stock split.
Are we even having this discussion next year about AMC being or just encountering a lot of challenges if the movie slate comes back and people go back to the movies and the movies are compelling and they're willing to spend more each time they visit?
I think the main issue is the number of releases. In 2022, we were back to about 65% of the quantity of releases that we saw pre-pandemic. Obviously, some big, releases like Black Panther, like Avatar this past week, and like Top Gun earlier in the summer. But we still need a lot of the filler product. We're just not seeing that. 2023, what we're expecting is we'll kind of get back to about 80% of quantity, and then it's going to come down to quantity. I think some of the streamers have backed off a little bit. They're going to continue to try to add subscribers on their D2C products. But we just need more product out there. Frankly, these fourth quarter results, I think, are coming in a little bit below where most people had thought. Avatar launched fine. It's going to have legs, but what we saw in October and November, we're certainly a step back from what we saw earlier in the summer.
Yeah, Chad, if I can get a little anecdotal for a moment. My family, usually, being a Jewish family, we usually go to the movies on Christmas, right? And this year, my older son already saw Avatar. I don't know what else. There's nothing else that I want to see that's really out there. I already saw Wakanda Forever. It's going to be freezing. We'd rather just stay on our couch and watch stuff. And I imagine other people probably the same. So, when you don't have that robust slate that you're talking about, it seems like that's really going to be potentially problematic.
Yeah, I think good point. And, hopefully you can find something out there, some content that you and your family are interested in. I think the family product has been certainly below what we have seen in prior years. You have some releases like Babylon, like Whitney Houston's movie. Avatar is going to take up most of the screens. But if that's just not something that you want to do, sitting through a movie 3 hours and 10 minutes, and that's really the big knock against this movie. that it is a very long production. I don't think we have the wide array of products this holiday season, as you mentioned, and we'll start to see some of that in February and March. But certainly from a family-friendly standpoint, we're just not seeing the releases that we saw in 2018, 19, and even in 2020.
Well, Julie, I think AMC is airing the first 3 episodes of our show, all 6 hours from earlier this year. I'm really excited about it. I suggest you go and see that. Maybe you too.
I lived it.
Macquarie Group Senior Analyst Chad Bynan, always good to see you. Happy holidays. Appreciate it.
Happy holidays. Thanks.